Hey, everybody, it's Paul here with your Monday mortgage update. Hope you had a wonderful weekend. If you're thinking about buying a home or if you're thinking about refinancing, I want to make this really simple. There is a lot going on in the news right now, especially as it relates to interest rates. People are hearing about Iran, inflation, jobs reports, the Fed, and the mortgages. Mortgage rates are moving around, and a lot of buyers, this could feel extremely overwhelming. So, what do you say today? We break this down into plain English so it makes sense to you. So, let's just summarize it. For the last 2 weeks, mortgage rates have gone up because the market does not like uncertainty, period. One reason for this uncertainty is what's going on in Iran. Right now, one of the big concerns is the Strait of Hormuz. I hope I say that right. Hormuz. That is that narrow waterway near Iran, and a huge amounts of the world's oil can't get through it. And so, why does this matter if you're thinking about refinancing or buying a home? It's really, really simple because when oil gets more expensive, it can raise the cost of many other things too. It can affect gas prices, shipping, travel, the cost of moving goods around. And when those costs go up, inflation goes up, and inflation is the kryptonite to 30-year fixed rates. We know that by now, though. Now, let's talk about the inflation report that came out last week. Last week, PCE came out, which stands for, you ready for this? Personal Consumption Expenditure Price Index. Kind of a mouthful, but that is one of the main ways the government measures inflation. And it is one of the reports that the Fed pays very, very close attention to. What this report told us is that inflation is improving, but it's not where we would like it to be quite yet. And one of the main reasons is that inflation takes time to cool because some of the parts on how it's measured, especially as it relates to shelter, like rent and housing related expenses, these are things that take time on how they're calculated to change. So they don't change overnight. But one quick note about cooling inflation, this does not mean that as inflation comes down, prices will come down. What it means is that they won't increase as fast as they have in the past. Prices that come down is actually called deflation. Now, let's get to the economy. Last week, we got a report on gross domestic product, or GDP. GDP is a broad measure of how fast our economy is growing. I mean, a simple way to think about this is the speed of a car, let's say on a freeway. The car is still moving forward, but we're trying to measure how fast it's going. And right now, from that report, what we're seeing is that the car is definitely slowing down. It's slowing down more than people thought. So when you start taking into consideration that and GDP, let's talk about employment, or JOLTS. The JOLTS report stands for Job Openings and Labor Turnover Survey. This report measures how many jobs are open, how many people are getting hired, how many people are quitting, and how many people are being laid off. Super important. And in other words, it gives us a really good look at the temperature of the job market, which is important when measuring where interest rates are going. What this report told us is that the job market is definitely cooling. So if I had to sum up last week very simply, this is what I would say. I would say inflation is improving or cooling. The economy is slowing down. That car is slowing down. And the job market is cooling. Now, all these would suggest lower interest rates like we saw a few weeks back. What kept rates up is one word, well, uncertainty and oil. Oil prices jumped because of the worries of the Strait of Hormuz, which added the possible inflation and uncertainty in the mix. And the market, my friends, just does not like that. Now, let's look ahead this week and let's see what can impact 30-year fixed rates. Tomorrow, we get a report on jobs and housing, which is a really important gauge to interest rates. On Wednesday, we get an inflation data report called PPI, which stands for Producer Price Index, plus the Fed statement and new economic projections, which is definitely something that can move interest rates. On Thursday, we get jobless claims and new home sales. Here's the easy way to think about what's this week. If inflation looks worse, rates could move up. If inflation looks better, that could be a good thing for rates to improve. if the Fed, this is important, if the Fed sounds worried about inflation, rates may stay higher longer. If the economy and jobs weaken more, that can help rates as well. So, where do I think rates will go from here? Well, that's a great question. My view is that once there's more certainty around the oil and what is happening in the Middle East, I do think there is a strong framework or groundwork for lower interest rates. We had a really, really good couple of weeks with rates. They got down into the mid fives, and now we're back in the low sixes, which, by the way, is still great. This is enough, though. However, this is enough to get people back on the sidelines and for you an opportunity to scoop up a house of your dreams. Less competition. You can ask for closing costs to be paid. And here's the questions, though, I would ask myself if I were you as rates go up. Can I responsibly afford the payment? Can I responsibly budget for the home? If all these answers are yes, understanding that if you buy today, even if rates are high, this could put you in a really good spot to refinance when rates are lower. So here's the thing. If you're thinking about buying or selling a home and you're not ready to make a commitment yet, let's do what's called a hopes and dreams conversation or a strategy session. There's no credit pulls, no applications. It's just me and you talking strategy and putting a plan in place for you, for your family to be successful. It's so important to know where you're at, and then we can talk about how you can use today's market as an advantage to help you save money on your purchase or your refinance. With that, I hope you have a wonderful week. My name is Paul O'Brantz, Clear to Close Brokers.